a concern point. But Kunal is here in the studio. Let's welcome him and ask him about how the week ahead is going to be. Kunal, hi, good morning. Any direction the market could take, or will we continue to see range-bound a move on the index?
I think we should continue to see range-bound. We are at a point where over the last 2 months, the markets have been range-bound. Frankly, we've been gyrating in a range around 24,000, 24,200 as a pivot, and then 300, 400 points plus minus broadly for the Nifty in the near term. And the way the large cap stocks are, so many of the larger cap names like Reliance, HDFC Bank, etc. These stocks have underperformed by a huge margin with respect to the other peers, even within their sectors or at an overall benchmark index kind of a peer group comparison. So I think I would probably expect the markets or the indices to remain into a range. It's just that I think a lot more different parameters which indicate that the market structure is still on the bullish side on a broader basis, because you look at the put call ratio, which is still hovering around 1 for the benchmark indices, both the Nifty as well as for the Bank Nifty around 0.9, 0.95 approximately for the index. You look at the open interest data, still no major change in terms of either unwinding or building up of fresh shorts even after the last week, where you saw almost 4 out of the last 5 days, the index closing into a slight tepid negative territory. And the third, the most important part is when you look at the sector compositions also, it still indicates that the markets are finding those odd sectors to try and make a comeback every time it gets beaten down towards the lower end of the price ranges we are into. So when we look at the broader construct, the view on the indices is still bullish, but it says that benchmark-wise, we are still stuck into this 500 points range plus minus.
Kunal, but sectors that you're likely to bet on or likely to outperform, or will that also be a mixed bag?
So as of now, so every month, the last 3 months, the markets have shown different textures in terms of sectors. I think the month of June, July was IT and realty. Right now, we are at a point where the PSU banking stocks are showing signs of strength. Metals have made a decent comeback from their July lows. You look at the media index, infrastructure index. I think these are the 3 indices which have done reasonably well so far this month, one of the 3 better performing sectors. And then on the other hand, you've seen energies, the PSU basket, the CPSE index rather. I think these stocks have taken a bit of a knock for themselves. So far this month, it looks like that the banking theme, specifically the PSU banking names, could be a pocket to look at. Few of these media stocks, for example, they've done reasonably well. That's another index to look out for. And then the infra index. So if I have to pick and choose from a short-term perspective for the next 1 week or 2 weeks, then we might probably want to look at these few sectors out.
Interesting. Just looking at the market texture on Friday as well and what really looked good or not. Apollo Hospitals, quite surprisingly, that got a leg up after its earnings, and that held out very smartly. Some of the Adani Group names, of course, were comforting the index, as was the case with Bharti after, some price hikes that they undertook. 1994, so almost nudging on to that 2,000 rupee per share mark. But very volatile, Kunal, for metals as a pack. I mean, the week began with extremely big moves on aluminum stocks, and then they completely, undid all that between Thursday and Friday.
Yeah, that volatility is still going to be a part of the metal counters. But when I look at the larger construct, there was a 20% correction which was there for these metal stocks. For example, Nalco, I think, corrected from 480 levels to 380, 360. Hindalco corrected from 1200, 1240 to almost 930, 940 approximately. So after a 20% correction, these stocks have seen a bounce back. Yes, the nature of the metal counters is very, very high beta. So that's why we expect that whenever these stocks go into any kind of a bounce back also, they are met with a larger or a higher degree of retracement, which could be the intensity of retracement is very high into these stocks. So I'm not surprised with the last 2-3 days of price action for these metal counters. But then broadly, when you look at this, that these stocks are still off by their previous lows, swing lows, by a margin of 5% to 10%, then there is a cushion which these stocks have established after this period of bounce. So I would still be bullish on the metal counters. In fact, on Friday, we saw names like Hindalco forming a bullish hammer pattern on the daily chart. So assuming these stocks don't break their Friday's lows, say over the next couple of days, then there is a very high likelihood that the stocks can go into a decent bounce back further.
Okay. Kunal, one set of stocks which have been under pressure, you've spoken a little bit about metals, but it's also realty, where there's been quite a bit of flip-flop. What next, and any top bets within that pack?
So I think realty should make a comeback again, because the last month there was what happened is when from their March lows, the real estate index move from those 650 levels to 900 plus, a decent 40-45% up move for the Nifty Realty Index. In the process of this 40% plus bounce, you saw the likes of Godrej Properties and Oberoi Realties being one of the top candidates in terms of an up move, and then it was followed by recovery across Prestige, Macrotech Developers, Lodha, and then some traces of comeback of sorts from likes of DLF, and then the tier 2 real estate names. Now, in the process, in the last 1 month, for example, in the month of July from the second half, names like Oberoi Realty, Godrej Properties, DLF, etc., they went to a price correction or a consolidation. These stocks cooled off by around 7% to 8% as an average retracement from their recent swing highs. Now, many of these stocks are now starting to form a bottom as well as show signs of a breakout. So if I have to pick and choose the names in the real estate pack, I would definitely look at DLF as a prime candidate of a recovery. The stock is trading at 660, 670. My sense is the stock should be able to surpass the 200-day moving average and maybe even try and challenge the 700 plus mark on the very short-term time frame, which could be a decent 5% to 7% swing upside for DLF. Oberoi Realty, I think at 1800 plus levels, where the stock has formed a bottom, should try and come back into at least a retest of the previous highs, which is around 1950, 1980 mark. Again, that's a decent 5%, 6% swing upside further from the current level. So when I look at this in the summation of the entire real estate index, I would sense that there should be at least a 5% to 7% kind of a swing upside over the next 1 to 3 weeks.
Well, just looking at the trend in the market all through last week, and yes, it was Telecom led by Bharti, which held out very well. And Kunal, Idea as well sprung up quite a fair bit. I mean, 14 rupee per share plus levels on that stock. Still headroom, do you expect or anticipate for both Bharti and Idea?
Yeah, I think for both of them, I think the trading capacity has started to be a lot more active for Vodafone Idea, which was not the case. The distinct feature which I track for Vodafone Idea is that stark comparison in terms of the beta nature for the stock price. Vodafone Idea was supposed to be or was considered to be a very, very high beta stock, and we used to see the stock moving up 8%, 10% on single days. But now what we've seen is that in the last 1-2 months, when the stock has gone through a correction, the intensity of correction has been very, very shallow. The stock has gone through a very slow, gradual process of correction. The mean retracement happened for Vodafone Idea just, I think, a month and a half odd back. The stock was at 15.5 levels, and then the stock corrected towards 13.5 odd mark in the process of the last 1.5 2 months. So it took 2 months for the stock to correct 10% as compared to an earlier capacity when the stock used to correct 5-10% on a single day. So once the beta nature of the stock gets reduced, it infuses a lot of positive sentiment across traders, because then trying to position the trade over here becomes a lot more easier because you're not prone towards high gyrated moves into the stock price. So Vodafone Idea, in net effect, I believe is could be considered as good buy at the current levels. I would place targets beyond the previous swing highs, which is 15 plus marks. So 16.5 is where I would place the targets for the stock in the near term, which could be a decent 10% to 15% upside over the next 1 to 3 weeks.
So other than Idea, what else do you propose to trade today?
So ICICI Bank is something which I'll go for a contra buy. Again, a preemptive move, expecting that the stock seems to have shown signs of a short-term bottom. In fact, on the hourly charts, there are two important patterns which you are looking at: a double bottom formation for ICICI Bank as well as an oversold RSI on the hourly chart. So we can expect a decent short-term bounce over here for the stock price. Buy with a target of 1455, stop loss to be kept at 1400. The second would be about Supreme Industries, a classical breakout, a flag pattern up move for Supreme Industries, a breakout of the previous major swing highs above 3,550. So would look at a buy with a target of 3,600, stop loss at 3,450.
All right, what we'll do is slip in a very short break. Come back. Plenty to speak about, frankly. There were earnings on Friday as well as Saturday, and some of them really stood out. We'll talk about some of those. And then there is stock-specific action as well outside of earnings. We'll speak about all of that, cover all of that before that crucial 9 a.m. bell. Stay with us.